All right, let's dive in. Today we're taking a closer look at Upstart Holdings.
Upstart Holdings.
Yeah, this AI-powered lending company.
Okay.
And we're basing this deep dive on a Motley Fool article that just came out yesterday, January 11th, 2025.
Very recent.
So it's really fresh,
Yeah.
and it basically talks about their journey, their innovative approach, and the, challenges and opportunities they're facing.
Cool.
So let's unpack that.
Sounds good.
So first off, what's really interesting about Upstart is this attempt to challenge the traditional FICO score
Right.
by using AI to figure out creditworthiness.
Yeah, that's one of the most interesting things about them.
Right.
They're really trying to change the way things have always been done.
Exactly.
Instead of just looking at your credit history, they use AI to analyze over 1,600 data points.
Wow.
Things like education and employment history.
So it's like a more holistic view.
It is. It's like of a person.
Yeah, they want to evaluate your potential, not just your past. I see.
Yeah.
Yeah.
It's a pretty big departure from the traditional way of thinking.
That's fascinating. And they've got this massive data set, right? 77 million repayment events to train their AI models.
Yeah.
But the question is, how's it actually been going for them since they went public?
Well, it's been a bit of a roller coaster ride.
Oh, really?
After their IPO in 2020, their stock just soared.
Makes sense.
Everyone was excited about this new approach. But then in 2022, when the Fed started hiking interest rates, the demand for loans dropped. Investors got nervous and pulled back, and the stock price tumbled.
Yeah, that's a classic story.
Yeah.
Market volatility meets new tech.
Exactly.
But the article says they're making a comeback in 2025.
They are.
So what's driving this renewed interest?
Well, a few things seem to be happening.
What?
First, their stock has surged like 158% in the last 6 months.
Wow, that's a big jump.
It is, and part of that is because interest rates are falling again.
I see, so it's kind of like a rebound effect.
Yeah, you could say that.
Yeah.
But they've also secured some major investments from big lending partners.
Okay.
Like Castle Lake committed $4 billion.
Wow.
And Blue Owl Capital pledged $2 billion.
Those are serious players.
They are, and that shows a lot of confidence in Upstart's model.
That's a huge vote of confidence.
It is.
And, it's not just like a small amount of money.
No, not at all.
That's a lot of money.
That's a statement.
Yeah, it's like they're putting their money where their mouth is.
Exactly.
Now, the article also mentioned something about declining interest rates and a potential opportunity for Upstart.
Right.
Can you break that down for us?
Sure. So basically, there's a massive amount of credit card debt in the U.S.
Oh, I bet.
Like $1.17 trillion.
That's a lot of debt.
It is. And as interest rates keep going down, people might start refinancing that high-interest credit card debt.
Makes sense.
Into personal loans with lower rates. Yeah. And companies like Upstart that offer these personal loans, they could benefit big time from this.
So they're kind of positioned to take advantage of this trend.
Exactly.
So people are stuck with this high-interest credit card debt.
Right.
And if rates keep dropping, they might be looking to refinance.
Exactly.
And Upstart is right there.
Right there.
Ready to offer them a personal loan.
Yep. Potentially grabbing a big chunk of that $1.17 trillion market.
That's a huge opportunity.
It is.
But the article also talked about a risk.
Right. There's always a risk.
What is it?
Well, it all comes down to how fast the interest rates actually drop.
Okay.
The Fed chair, Jerome Powell, he's hinted that they might be cautious about cutting rates too quickly.
I see, because of inflation.
Yeah, they're worried about inflation spiking again.
Makes sense.
So if the rate cuts are slower than expected, it could really impact Upstart's growth.
So it's a waiting game.
It is.
If rates plummet, they could be in a great position. But if it's a slow trickle down, the impact might not be as big.
Right.
So what about their actual performance? Are their loans doing well?
They are.
Is the technology actually working?
Well, from what the article says, their loans are performing well.
That's good.
Which suggests that their AI risk assessment is pretty effective.
That's encouraging.
And they're also very efficient.
Really?
Over 91% of their loans were fully automated last quarter.
Wow. So they're really leveraging the technology.
They are. It's all about scalability.
So they've got the performance, the automation.
Yeah.
But what about their valuation?
That's where things get a little tricky.
How so?
Well, they're currently trading at 5.5 times forward sales.
Okay.
And a whopping 55 times forward earnings.
Now, hold on. For our listeners who might not be familiar with those terms, could you explain what forward sales and forward earnings actually mean?
Sure. Forward sales basically means the revenue a company is projected to make in the future.
Okay, so it's like an estimate.
Exactly. And forward earnings refers to the profits they're expected to make.
So it's all about future expectations.
It is. Investors are essentially betting on Upstart's growth potential.
And that's reflected in their current valuation.
Exactly.
So a high multiple on forward earnings means?
It means investors have high hopes for Upstart's profitability down the road.
Big expectations.
Big expectations.
But can they live up to the hype?
That's the million-dollar question, isn't it?
It is, and it's something we need to consider carefully.
Absolutely. We need to look at both the potential and the risks.
That's a great point.
This isn't just about stock prices and investment opportunities.
Right.
It's about the bigger picture of lending and how technology can make financial services more accessible and efficient.
It's about changing the game.
It is, and it raises cars about how we assess creditworthiness and who benefits from these new models.
So Upstart's story is really a microcosm of this larger conversation about AI and its impact on society. It's exciting to see the potential benefits.
Definitely.
But we also need to be mindful of the risks and challenges.
Absolutely.
And that's why these deep dives are so important.
I agree.
We're exploring these complex issues.
Yeah.
Highlighting both the good and the bad.
Right.
So we can have a more informed discussion about the role of technology in our lives.
I think that's crucial.
Now, for those listening who are interested in the financial markets, Upstart's journey offers some valuable lessons about investing.
Definitely.
We've talked about their high valuation.
Right.
Which reflects optimism, but also signals risk.
Yeah.
So what advice would you give to someone thinking about investing in a company like Upstart?
Well, I'd say investing in any company, especially one that's trying to disrupt an industry like this, requires careful consideration and due diligence.
So do your research.
Do your research, understand their business model, their competitive landscape, their financials, and the potential risks.
It's not just about jumping on the bandwagon because a stock is hot.
No, it's about making informed decisions.
And diversifying your portfolio.
Absolutely. Don't put all your eggs in one basket.
Exactly.
Investing in a company like Upstart could pay off big.
Right.
But there are risks involved.
That's a great overview,
Yeah.
We've covered their journey, their tech, their potential, and the risks.
I think we've hit the main points.
And we've even touched on these bigger societal implications of AI-driven lending.
It's a fascinating topic.
It really is.
With a lot to consider.
Before we wrap up this part of our deep dive into Upstart, I want to leave our listeners with a thought-provoking question.
Okay.
What are your thoughts on the future of AI-powered lending?
That's a good one.
Do you think companies like Upstart will dominate the industry? Or will traditional institutions adapt and hold their ground?
It's hard to say for sure.
It's a tough one.
But it's definitely something to think about.
It is. Will Upstart's model be a sustainable and fair solution to the problems with traditional lending?
That's the key question.
Or will it fall short?
Time will tell.
These are the questions we hope you'll keep exploring.
Keep those minds working.
Because whether you're thinking about investing or exploring loan options or just curious about the future of finance,
all connected.
The insights we've shared today can help you navigate this complex world.
I hope so.
Now, we've gone pretty deep into Upstart's model.
We have.
And explored their growth. But we also need to discuss the risks tied to their high valuation and the competitive landscape.
We'll get into that.
So stay tuned for the next part of our deep dive.
We'll be right back.
Where we'll continue to unpack Upstart Holdings.
It's going to be good.
Welcome back. We've been talking about Upstart Holdings and how they're using AI to shake things up in the lending industry.
Yeah, it's fascinating stuff.
Before the break, we were discussing their valuation, which is pretty high.
It is.
And some of the risks they're facing.
Right. It's kind of like they're walking this tightrope between huge potential and a lot of uncertainty.
Exactly.
Yeah.
And it's important to remember they're not operating in a vacuum.
No, not at all.
It's a really competitive and regulated environment.
It is. They're not just up against traditional banks and credit unions.
Right.
They've got other fintech companies to worry about, too.
Of course, all vying for a piece of the pie.
Exactly. Everyone's trying to come up with innovative lending solutions.
So it's not just about having a good idea and a fancy algorithm.
It's really not.
They need to navigate this complex landscape.
Yeah.
And convince everyone, consumers and investors, that their approach is the future.
And that brings us to another interesting point the article brought up.
Okay.
The potential societal impact of AI-driven lending.
Right, because we can't just assume AI is automatically fairer
Exactly. That's a misconception.
than humans. Right.
Yeah, there's this idea that AI is somehow unbiased, but that's not necessarily true.
Because it depends on the data it's trained on.
Exactly. If the data reflects existing biases.
Then the AI will just perpetuate those biases.
Exactly. It could even amplify them.
And that raises some big questions
It does.
about transparency and accountability.
Mm,
Like, how do we make sure these AI models are actually making fair decisions?
that's a tough one.
And if there's bias, who's responsible?
Right. How do we hold these systems accountable?
These are things regulators and policymakers are really grappling with.
They are, especially as AI becomes more integrated into our financial systems.
So Upstart's story kind of highlights this larger conversation about AI and its role in society.
I think it does.
It's exciting to see the possibilities,
Yeah,
but we have to be aware of the potential downsides.
definitely. We need to have these conversations.
Now, for our listeners who are interested in the financial markets, Upstart's story is a good example of how things work in the world of investing.
Yeah, it shows how quickly things can change.
Their valuation is high,
It is.
which shows optimism, but also signals risk.
Right. There's always that balance.
So what advice would you give to someone thinking about investing in a company like Upstart?
Well, I always say the same thing. Investing in any company, especially one that's trying to disrupt an industry like this,
Yeah.
it requires careful consideration,
So your homework,
Exactly. Do your research, understand their business model.
their competition.
Yeah, their financials and the potential risks involved.
Don't just buy a stock because it's popular.
No, make informed decisions.
And diversify, right?
Absolutely. Don't put all your eggs in one basket.
Now, we've talked a lot about Upstart's journey,
We have. It's a fascinating story.
their technology, their potential,
Uh-huh.
the risks involved.
It's a complex picture.
But before we wrap up,
Mm-hmm.
I want to leave our listeners with one final thought.
Okay.
Upstart is really challenging the status quo in finance.
They are pushing the boundaries.
They're raising questions about how we assess creditworthiness,
Right. Who gets access to loans?
how decisions are made,
And how technology can change things for the better.
and whether Upstart ultimately succeeds or not. Their story is a powerful example of the power of innovation.
It is. It shows what's possible when you think outside the box.
It's a reminder that we're living in a world that's constantly changing.
Things are moving fast.
New possibilities are emerging all the time.
It's an exciting time to be alive.
Thanks for joining us on this deep dive into Upstart Holdings.
It's been a pleasure.
We hope you found it insightful,
We'll have to do this again sometime.
and we look forward to bringing you more deep dives in the future.
Stay tuned.
Until then, stay curious. All right, so we've really dug into Upstart Holdings.
Yeah.
Their innovative approach to lending, their impressive growth,
Mm-hmm.
and those potential risks they face.
I always got to consider those.
And now as we wrap up, I want to circle back to that big question.
The big one.
Can Upstart really revolutionize consumer lending?
Become a major player.
Yeah, that's the question everyone's asking.
It is, and it's tough to say for sure.
They've definitely got some things going for them.
They do. That AI technology.
Right, the partnerships with those big lenders
Serious backend.
and the chance to really capitalize on this refinancing wave.
As interest rates drop?
But there's also that uncertainty.
Always.
It's like we're watching this high-stakes game.
I like that analogy.
They've made bold moves. They're getting attention.
They are.
But can they keep it up?
Can they live up to those expectations?
Especially with that valuation.
Yeah, that's the multi-billion-dollar question.
And I don't think there's an easy answer.
No, there isn't.
It depends on so many things.
It does. Their ability to scale up.
Right, keep those loans performing well.
And navigate all the regulations.
Not to mention the competition.
Oh, yeah, traditional and fintech.
It's a tough landscape.
It is.
So it's not just about the product, it's about execution.
Yeah, exactly, adaptability.
Maybe a bit of luck.
You always need a little luck.
So for you listening, I hope this deep dive has given you a better understanding
Of Upstart and the future of lending.
whether you're an investor,
A borrower.
or just interested in this world of tech and finance.
It's a fascinating world.
It's a story worth following.
Absolutely.
But we always encourage our listeners to do their own research.
Make your own conclusions.
What stands out to you as the most significant takeaway?
What are you thinking about after all this?
Is it the AI,
The disruption.
the risks?
So many things to consider.
Think about it. Upstart is challenging how things are done,
They're pushing the boundaries.
raising questions about creditworthiness,
Who gets loans?
how those decisions are made.
And how technology can make things better.
And regardless of whether Upstart reaches those heights,
The top of the mountain.
their story shows the power of innovation.
the potential of technology.
It's a reminder that we live in a dynamic world.
Things are constantly changing.
New possibilities are always emerging.
Makes you excited for the future.
And that's what makes it all so exciting.
It really is.
Thanks for joining us on this deep dive into Upstart Holdings.
It's been a pleasure.
We hope you enjoyed it, and we'll see you next time.
Until then, keep exploring.